last week, where are we? So last week we are somewhere around here, just kind of breaking out of 3800 level. So for the S&P 500. So I talk about that we are sort of in an inflection point because this is the key level, 3800 level, together with the breakdown bar. So this is the bar that actually started the breakdown and then initiate one of the downswing. So you can definitely see that there is indeed a reaction of the area. So this is the area that I think is of interest, 3800 all the way to somewhere around maybe close to 3900. So we definitely see that got a breakout bar on last Tuesday. Subsequently, there's a rejection tail right here and then followed by a reaction. But what exactly is the reaction? So we definitely see that the reaction comes with demand tail. So here's a demand tail. So although there's a reaction, there is buyers come in, they bought a dip, okay? So they bought a dip and you can see that it's just commit above the level at a 3800. And the next bar is even more bullish. So this is another bullish momentum bar. So yesterday, we got a little bit of the reaction. So what is the results? Tiny little bit of the spread, okay? Maybe 1/3 of this bar. So all this point to a relatively bullish direction. And in terms of the volume, we definitely see that supply is decreasing. So this is another encouraging sign. So at the moment, just from the price action perspective together with the volume, I would say that is definitely bullish. The direction is definitely still up, okay? So however, it's still testing this area. So 3900 and 3800. So it's sort of still testing that, but based on the reaction show up last week. So for example, this sort of the reaction and this tiny little reaction, I think still very encouraging. I still expect some more upside movement. And one thing that is very important is this week we have a very important event. The FOMC is coming out in my time zone, like this coming Thursday, 2 a.m. So I think that is definitely a price mover. So one thing that could happen is a reversal. So if Fed really still want to carry on a very hawkish stand, and I believe that could really trigger another deeper pullback. So until we see that a reversal that can violate like 3800 level, means that there is need to see a commitment bar just close below 3800. The short-term direction is still up. So it could have a reaction, something like this, and eventually it could still go up. But if it just violates the level at 3800, that could signal a reversal from here. Means it should just kind of go all the way and maybe to test the previous low again. So it could form a higher low or even a lower low. So that's another story. We need to watch it bar by bar. But until that happens, the direction is still up. So 3800 is has become the immediate support level, which is very important because you can definitely see that the reaction kind of want to penetrate 3800, but we see the buyers come in, bought a dip. So that's kind of important level we definitely want to pay attention to. And if this coming Thursday, after the FOMC, maybe after the 75 basis point hike, and we still see the S&P 500 still going strong, means it could still maybe go up or even just commit above 3800. Likely the next resistance level will be 4,000 to about 4,100. I think this is the bar that need to get tested. So if you recall, this is the CPI bar that really trigger the whole downswing. All right, so you got a few important bars. So the first is the Fed bar, okay, the rate hike bar. So that has been tested. I think it's quite successful. And subsequently, the CPI bar need to get tested for the bullish case, which I believe we could see that after the FOMC. If not, then the bear really need to show its commitment to close below 3800. All right. So if you look at this structure, so this is kind of the long-term down channel, long-term downtrend is touching quite a number of times. So in case it's going to challenge this CPI bar, means that's somewhere around 4,000 to 4,100. So that is also coincide with this supply line. So I think this is kind of the most bullish case that we could anticipate. So one thing that I would like to point out about the short-term analog is I find that the current situation right here is sort of comparable to the low that we have experienced in May. So why is that? So first of all, this is off the supply line. So there's a downtrend. So here's a downtrend. And subsequently, we see the oversold level bounce up. So oversold level bounce up, and then followed by a test or a spring. So this acted as like a spring. So it's just a temporary commitment, and then here we go. There's a very good rally. So this is also a spring, a temporary commitment, and here we go, a very good rally created uptrust. So at the moment, the uptrust or sign of strength rally to be confirmed or fail is still unfolding. So would it happen like May or June? So if that really unfold like in June, early in June, that could well be after the FOMC. Then we see a commitment bar coming below 3,800. So that is the sort of the bearish case. Then I think we could sort of anticipate another leg down, sort of have this kind of the panic level, big spread bar together with the acceleration to the downside. But the first level that you need to come in below is 3,800 level. So FOMC will be the key event to drive that. So that is just a kind of the analog comparison, because right now is sort of like if this is the very similar structure. We got a kind of a selling climax, 1 minute rally, and a test with a spring, and then forming an uptrust, and this is the failure bar. So this is also like oversold level, 1 minute rally, and then with a spring, and we have a, at the moment is acted as a sign of strength rally. But in case if it fails like this, then it could turn out similar to another downswing back in June. All right, so that is the bearish analog, which is very similar to May to June development. But so far, based on the price action alone, I still see that we could have more upside ahead even after the FOMC, because at the moment, supply has been decreasing and I don't really see downward results. So this is very encouraging and it's really good for the bull. And most importantly, if you check out the stocks that I covered last week and also the week before, which are pretty much most of them also the same stocks, they're still going up. They're still going up very strong. So I think this is probably the most important thing that we could pay attention to, because if you think about this, what's happening like the past 5 days? We got Facebook tank like hell. We got Amazon tank like hell. All those big tech, they just didn't perform. But what's the results? Here's the result. This is a result. Okay, so if you talk about like, well, this is S&P 500, it's not even the Nasdaq. Okay, let's take a look at Nasdaq. What's happened to Nasdaq? So even given with the Facebook results, Amazon results, Google results, they're not performing at all. But what exactly is the results? Here's a reaction, and here is a laggard. So it's still just below the swing high. So it's just struggled to break out. So unlike the rest of the indices, like Dow is definitely the strongest. So we see that Dow already commit above the CPI bar. Okay, so this is actually the CPI bar. And we also see that Russell is pretty strong. So we also see that Russell kind of challenging halfway of this CPI bar. So I believe this is a CPI bar. Yep, so this is a bar. So the first, well, I think the strongest is Dow, followed by Russell and S&P 500, and Nasdaq is the laggard. So with all those kind of the earnings and tank like 10%, 20% for those mega cap tech stocks, we still see Nasdaq form a higher low. So this is a low, higher low, another higher low, or maybe it's a kind of flat. So this is very encouraging. I think given that it doesn't really affected by the bad earning. So despite there are just kind of a few mega cap stocks just drop significantly, still overall index are holding up very well. So these are all the healthy signs, even for indices. So not to mention about the stocks that we selected and focus, because those are the outperforming stocks that we should be trading. All right. So Nikki say, is there a VCP pattern since mid-October? So you mean the S&P 500? So if you talk about the S&P 500, well, it's probably not the classical the classical VCP pattern, but definitely this is there's a decreasing of the volatility, because if you just compare all this down wave, okay, what are the characteristics of this down wave? They are very volatile, right? We see the big spread bar, we see a acceleration to the downside. So what about here? The textures are just different, right? The texture is very much different. And also for each downswing, we see that this is the downswing. It's very shallow. So this is not the typical type of the VCP, but definitely there is a contraction of the volatility or the decreasing of the volatility. All right. So no matter what, I think that I'm sort of hopeful that we still could see another push up. So provided that I mean, that's all depends on how Powell will say during the FOMC. What is he going to say? So if that's the case, then this is the level that we need to pay attention to, 4,000. So sort of like halfway of this bar. So this is the area that we definitely want to pay attention, because at the moment, I think that the reaction is very shallow, and if it just come all the way to this point, then I think this is definitely a more logical place to have another reaction down. Okay, so the next movement of this down leg will determine the slightly longer term perspective, because ultimately, don't forget that we are still within this big trading range. All right, so it's still within the trading range. So I wouldn't be too surprised if it could just come all the way to 4,000, 4,100. So just because that I kind of anticipate, well, there could be a reaction or reversal, but if the results doesn't really show up, there's no significant reversal bar, then means the direction is still up. So I just need to respect the price, and my opinion of having a reversal here or a reaction here doesn't really matter. So there's a reaction, of course, here's a reaction, but it's not that significant. So until I see that it could really come in below 3,800, direction is still up. So just trade to the upside and prepare for a potential reversal if it closes below 3,800, or next level is about 4,000 to 4,100. So this is the supply line that get tested quite a number of times. All right. So that's the S&P 500, and we talk about the Nasdaq. Even though the Nasdaq is still the laggard, but I think ultimately we still see it's forming kind of a maybe a inverse head and shoulder, pending a breakout. So a breakout happen will just challenge this. I think this is the Fed bar, so definitely a laggard in the Nasdaq 100. But if you take a look at the Russell and a lot of the small to mid cap stocks, they are doing very well. So that's very encouraging. And now, of course, if you check out those big cap, mega cap stocks, a lot of them are just hitting the all-time high, new high. So that's definitely very, very encouraging. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.